Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to go over stocks that have ex-dividends next week. I have 4 stocks for you guys. We're going to see whether these stocks are valued, overvalued, or good buying opportunities. We're going to look at them, at their payout ratio, dividend growth, how long they've been increasing and paying out dividends for, what's their dividend history. We're going to look at their price, yield, 200-day, 50-day moving averages, and so much more. So I had a huge list today of stocks going ex-dividend next week here. I had 100 stocks. They were all scored using the Dividend.com DARS rating system, which measures their strength, yield attractiveness, reliability, uptrend, and growth. Gives them a rating of 4.6 to 5, 3.6 to 4.5. And then using that information, I go ahead and screen for ex-dividend stocks coming up next week. I had 100 stocks. That's a ton of stocks here. I put these into my spreadsheet here. So I started off with 100 stocks here. There was 100. Let's go right there. 100 stocks. I then removed stocks that had a dividend yield under 1.5. The S&P 500 has a 1.78. I round down to 1.5. That way I can include Apple, Activision Blizzard, Starbucks, what other ones? Nvidia. Growth dividend stocks. Those are some growth dividend stocks. So anything below a 1.5, I removed from my list by doing that. I then had 68 stocks remaining here. I highlighted the row, 68. Of those 68, I recognized 11 of them. That was a percentage of 16.18% of the stocks total that we're looking at this week. So of these 68 stocks, I then put them into Y charts. And I screen them for price earnings ratio less than 25. Why 25? The S&P 500 has a PE ratio of 24.79. I rounded up to 25. Cut all the stocks off here that have a PE ratio over 25. And then from there, I looked at stocks that have forward PE, that anything that had a forward PE expected to decrease, meaning that the company is becoming more profitable. I kept them on my list. Anything that showed a PE rising in the future, meaning the company is going to become unprofitable or less profitable than they currently are, I removed them from my list. I then went and looked at revenue, free cash flow, net income over the last 5 years and 10 years. I wanted to see some positive numbers here, all positive as far as revenue, free cash flow, net income for the last 10 years. And for the last 5 years, all of these companies here have been solid companies for their revenue, net income, free cash flow over the last 5 and 10 years. What else did we screen for? I think we screened for something else, but we're going to go ahead and proceed here. So I have 4 stocks for you guys that have ex-dividends next week that you could check out, and these could all be good investment opportunities. You just have to do a little bit more research as far as taking a look at their balance sheet, how much debt they have, quarterly, over the last 4 quarters, have they been profitable, have they beat earnings, revenue, and so on. So let's go ahead and make this quick. So stock number 1, we have ticker symbol PCAR. This is PCAR Inc. Truck and Other Vehicles. We can see that this company is currently priced, what is going on my screen? They're currently priced at $65.17. Their yield is at a 1.72, which is one of their highest points you're going to get currently in the year. They have a very solid payout ratio of 18.7, 8 years of dividend growth since back in 2010. They have a history of special payouts. You can see here down in the graph, they have a huge history of doing special payouts. Plus, they do like to do stock splits. You can see these little stock splits over here. They go 3 for 2, basically increasing your holdings by 50%. So if you have 100 shares, 150 shares and so on. Their ex-dividend date is on August 13th. You would then get paid out on September 5th. Price and yield, you can see that yield is over the price right now. That means it could be a value buying opportunity, but at the same time, what has caused this company to ride from nearly $80 all the way down to breaking $60 here recently in 2018. That could be all tariffs. This is a trucks and other vehicles company. As we come down here towards the snippet, we can see that this engages manufacturers in distribution of light, medium, and heavy duty trucks in the aftermarket distribution of parts worldwide. So they're going to get hit by tariffs all, whenever they're exporting parts that are made from steel, aluminum, and so on. Now, price in comparison to their 200-day and 50-day moving average, it is below the 200-day simple moving average, but not below the 50-day simple moving average. It was below the 50 and 20 here back in early July, but has came over the 50-day moving average here recently. Overall, for the history of this company, it does have uptrends, and it loses about 50% of its value, and then has another uptrend, loses about 30-50% of its value. I wouldn't say, I'm saying 50% because it looks like it, but in all reality, every couple of years it does have a bit of a pullback. You can see here, 2018, they have had a bit of a pullback. This company could come back up to about $85 point, but with tariffs right now being enacted and such, the future of this company could be a little bit different. That's something you guys would have to look at the balance sheet and such. Now, looking at their price to book, price to sales for the year, we can see that they are currently price to book at a 2.6, which is pretty solid right now. You can see that this came down slightly. Their prices came down, whereas the book value of the company has remained the same, which has dragged this price to book value kind of down and has kind of tampered off now as their price has been recovering. And price to sales, you're getting it at a solid 1.04. So price in comparison to its sales, you're getting it at almost at a 1-for-1 value. Now, return on invested capital, you're getting it at a 12.08%. So when you invest money in this company, they're able to take that money and make you about 12% off your return or off your invested capital with the company. Their cash conversion cycle is around 177 days on average for the year, and has came down recently, so that's really well. You want these numbers to decrease with time. That means that they're able to make profit and turn cash flow less with less days out on the market. So here, their average for the year is 177. They've actually been decreasing here at 138. An example of this with a negative is Apple. Apple has negative 46 and so on. So you want to see it lower numbers. Lower the number. You want their quarterly numbers to be less than their annual numbers there. So that is PCAR, Trucks and Other Vehicles Company. Next, we have Snap-on. Snap-on is small tools and accessories. They're currently priced at $170.11. Price and yield for the year, we can see that their current dividend yield is at 1.93. That's right up in here. Not quite the highest it's been. You can see here back in April, May timeframe, you could have bought this stock at a 2% dividend yield on cost, and their price was at $145. Now they're trading at $170. So right now, this one could be slightly overvalued at the current time. They have good payout ratio at 27.8. 8 years of dividend growth since back in 2010. Their next dividend date is on August 16th. That is next Thursday. You'd have to buy the stock on Wednesday or prior, and then you'll get paid out on September 10th. Now, back in 2010 here, if we take a look at their history, we can see that they locked out their dividend for many years. Going into the recession, they raised their dividend from 27 cents to 30 cents, locked it out at 30 cents until 2010. They had enough free cash flow and cash on hand and net income in order to start paying out their dividends again, and they have raised it since that point. So overall, good, solid history of paying out dividends. And during times of recessions, they do lock it out, but it's better than cutting it or just getting rid of it altogether. Now, we saw that price to yield is about average. You're actually getting it at a good yield on cost, which is right up here. Now, if we look at price in comparison to its 200-day and 50-day moving average, it is currently above its 50-day and 200-day moving averages, so overvalued there at that point. Price to book and price to sales. Why do I have so many of these? There we are. Price to book is at a 3.1. Not quite that 2-point range where you would have bought it back in the April-May timeframe like we just talked about, but it's still at one of those, not too high, not too low points. Price to sales at a 2.4. Again, it is a recovering stock here. You can see that the price over the last 10 years does go normally on the uptrend. As of 2016, it's been trending sideways, but their financials have been growing year over year. So this one could just be building up and could begin to see some movement kind of going forward. But again, small tools and accessories, it could be one of those companies affected by the tariffs. that could be something to check out there. Now, return on invested capital, this one's getting a 14.63%. It's getting solid 10% or higher after 2012. So this one, very nice solid returns on your invested capital with them. Here, their cash conversion cycle is normally at 189 days for the annual. They're actually up at 200 days, so maybe some of their products are staying out in the market a little bit longer and not turning that cash flow for them as fast as they would like. Next, we have KLAC 10 Core, ticker symbol KLAC. This is a semiconductor equipment and materials company. They have been paying out dividends for the last 8 years, since back in 2010. Payout ratio solid at 32.3. Their dividend yield is at 2.54%, which is higher than this graph is showing. So for the year, they're actually right up in this period up here. So you're getting a high yield on cost right now in comparison to the last year that they've been trading. Back in 2010, if we look at their history, we can see here, take a look at 2010. They locked out their dividend again. So here, they didn't have a pullback. They just locked out their dividend. Going into 2008, they locked out their dividend at 15 cents per share. Didn't continue to pay out dividends until after they came out of that recession. Then they had a special payout here at $16.15, or $16.50 per share to their shareholders. And very nice payout there. Payout ratio at 32.3, $3 per share payout and yield. Their ex-dividend is August 14th. That is next Monday. Oh, actually, that's next Tuesday. You'd have to buy the stock on Monday or prior, then you would then get paid out on August 31st. Price and yield, you get it at a good yield on cost for its price to its 200-day and 50-day moving average. It is greatly over the 200-day and 50-day moving averages there. If we take a look at its price to book and price to sales, price to book, you're getting it at a pretty good buying opportunity at 11.38. It does seem a little high, but for the history of this company here, you can see that its price has came back, whereas the book value of the company has grown, and that has caused its price to book value to become more reasonable at 11.3. That's still pretty high for as a value investor, whereas their price to sales has came up recently, so maybe their price has shot up faster than their sales has came up, or it's actually pretty even, so their sales and price has moved up steadily, which has kept them right around that 4.5 range for the last 3 years. Now, if we look at the return on invested capital, they're returning about a 20% on your investment with them, and that's pretty solid. Going after the last, let's see here, back in 2011, they have just been able to continue to return. Whenever you invest capital with them, they've been able to make that and make it more profitable there, returning good returns for the investor. Here, cash conversion cycle annually is in the blue at 230 days. 237 days is where they're currently at for the quarter. This could be, could be good, could be bad. Semiconductor company, so I'm sure their products are just their equipment are just getting placed into products that may be sitting on the shelves. So overall, still not bad. You'd have to compare it to other comparables in that same market. I would say that's not actually bad. I mean, they're turning a very nice return on your invested capital and have been kind of growing their steady, and they have good dividend history. Now, the last stock here is a latte, maybe a latte, who knows how it's pronounced. Ticker symbol ALE. This is Diversified Utilities, ticker symbol ALE, which we've already said. 7 years of dividend growth since back in 2011, 67.1 payout ratio, which is pretty high. But again, it's a utility company, so they're generally a monopoly in whatever area that they're in, they're doing business in. They are dividend yield at 2.92, so price and dividend yield here for the year. We'll see 2.92, not quite there, so this one has price over yield, so not a value buying opportunity as far as dividend and price. If we look at price and 200-day and 50-day moving average, we can see that it is also over the 50-day and 200-day moving average for the year, so not a value buying opportunity, whereas if you had bought this here in June timeframe midpoint, that would have been below 200-day and 50-day moving averages, and then here back in that February, March timeframe, that would have been another great buying opportunity where you would have got a very nice yield on cost at around 3% during that time, almost near 3% instead of that 2.92% where it's at which isn't bad. And we look at their price to book, price to sales. Price to book is at a 1.86. That's actually a very nice price to book. Not the lowest that it's been, but it is trading at a point where it's considered a value buying opportunity. Also, their price to sales is at a 2.8, so it's very solid there as well. We can take a look at the return on invested capital. It has been on the decline as of recently. Not, extremely high. Some investors like to look at a 10% return or higher on the return on invested capital, whereas this one's at a 4.71. So really up to you. If you have other companies out there that may not return as much on your invested capital, this one still could be a good potential buy. Cash conversion cycle for this one is normally for the annual is at 29.25. They have jumped up recently to a 64.4 days out there in order to turn their products into cash. So it has kind of slowed down recently for them. So this is utility companies with rising rates, interest rates, their debt becomes a little bit heavier. So take a look at their 2011 here. We can see here that they did cut their dividend from 85 cents per share down to 30 cents per share. So that's a huge cut there. And then they locked out their dividend during the recession period. So I would say this is a little bit riskier if you're a dividend growth investor. This one does have a tendency to either cut it or just lock it out during times of downturn. So those are the 4 stocks to check out this week that have ex-dividends next week. If I were to select one of these to take a look at a little bit further, I would probably select ticker symbol KLAC, that semiconductor company, just because I believe it may have a little bit more growth to it. Its return on invested capital is very nice, price to book, price to sales, and its overall revenue, net income, and free cash flow. And you're getting it at a pretty break-even point right now. So that is it for this week's stocks that have ex-dividends next week. If you are brand new to the channel, remember to hit the subscribe button below. If you did like the content, hit the thumbs up button below. I really appreciate it. It helps out the channel. And if you have any investors that are also stock market and dividend investors, remember to share the video with them if you are in any Facebook groups that have dividend investors on there as well. So thank you guys for tuning in. I will see you next time. And as a quick disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself trying to help others make their money work for them. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.